Hi, and welcome to the round 2 review of the Zoom simulation for our class. So let's look at the points for this round, and we'll see that we have from very high points to 700 to even some negative points. So this round has a nice mix of different teams performing at different levels. Now, if we look at the gross profit margins, we'll see here that every team is, except for two, is above the 40%. So you started at a gross profit margin of 40%, and now it's the second year, and the top team has gotten up to 48%. But there are two teams who are below 40%, 33 and 30%. So yes, those are the two teams that had negative points. So I did stress quite a lot last video that you have to increase your profit margins every round. This is what investors expect. If you owned a business and you put it in the hands of managers, wouldn't you expect or hope that they'd increase profits? And if they did increase profit margins and profits, you'd be happy. If they didn't, you'd be unhappy, probably rate them poorly. So that's the basic story of, I think, how the points fell out this round. The teams that are able to improve their profit margins from last round were able to get a lot of points and do well, and teams that were flat or only had small increases only had a small amount of points, and people who went backwards in gross profit margins had negative points. Okay, so if we look at stock price, looks like most teams' the stock price has gone up, and return on equity is good. Total points. Okay, so let's talk about total points for a minute. Now remember, this is after two rounds. You should be around 1,000 points because you're looking to average about 500 points a round. So more than 2/3 of the class are at 1,000 points or higher. The people who are below 1,000 points, you really need to spend some time in the practice rounds, running a few practice rounds to get a feel for it, watching my videos to the end, listening to my advice, reading the student user guide somewhat, reviewing the industry page, seeing what other teams are doing, and getting some information to try to improve your game, make yourself more competitive. Okay, operating profit margins. Now, operating profit margins, they're important too, and a big cost from when you go from your gross profit margin is really just looking at your costs, your direct costs. The operational profit margins are some fixed costs and mostly marketing. So if you're over marketing and not taking advantage of all the demand you developed, that could be an issue. So that's something that you definitely want to review. So you may, and if you're under marketing, you may be meeting your demand and having leftover inventory. So you really want to look back and see, did I have excess inventory? So maybe I undermarketed, and I could have sold more cars or invested a little bit more money in marketing. And if you over-marketed and had low operating profit margins, you may have not built enough cars to meet your demand. So these are problems that businesses are faced with today, and it's very, it's tricky, but the simulation, the user guide of the simulation does a good job of laying out exactly the median amount of cars you should sell every round, and then you just have to kind of base on if you feel you're more competitive than others, increasing on that base. The student user guide also details the growth rates between rounds, so you can get an idea of how if the 50% growth rate and you sold 2,000 cars last year, then next year you're going to sell 3,000 or around there. There's no guarantees, but the user guide does a good job of helping you improve your forecasting skills. Okay, so earnings per share, we had a range of $2.69 to $5.56. That's really awesome. You beat 81% of all the teams that played this simulation in the past couple of years. Return on assets. Sometimes return on assets may go down from round to round if you're making heavy investments in the company. If you are buying a lot of plants or investing for the future, the current round you may see a dip in your return on assets, but that's going to spring back up once you start utilizing those assets. So it's important, though, that you don't buy more plants than you actually need. Okay, so the net profit margin, you can see a difference between 21% and 9%. So it is possible to get over 20% net profit margins, and this is really, managing your interest a lot. Like taxes are pretty much the same for everybody, but the interest you pay, the more money you borrow, the higher your interest rate. So sometimes if you're coming off, if you have a good gross and operational profit margin, and you notice your net is very small, you may have borrowed too much money, and at a certain point, you do need to borrow money to move your company forward. But at a certain point, you could start retiring that money and lowering your interest rate and your total interest paid. And revenues per share are important. So you should be getting around, $30 per share in revenues per share. And if you're under $30 per share, you're under forecasting. Okay, total asset return is a return on the assets you've invested. So if you increase the amount of assets you've invested, you may have a low total asset return. But if those assets are going to be utilized moving forward and increase profits, this number will go up. So a lot of times in the second and third round, those are really investing rounds. So you may not see huge points in round 2 and 3 because you're putting a lot of assets in play and you're investing a lot in the company, and your company isn't big enough to generate sizable economies of scales or profits. So generally a lot of students do better in rounds 4, 5, and 6 in points if they've invested properly in the first, second, and third round. Okay, let's go look at the charts. Okay, so we have, let me just move. So I'm going to make this a little smaller. All right, so it'll fit in the window. Okay, so here is our net profits per team, and we'll see that net profits went up for most teams. This team net profits went down, and that's a bad thing, and that's why that team lost or went negative in points. And some teams, this team was top last round and they're top this round. So this is really the team to look at. What are they doing that's so effective? And we have 4 really strong competitors in second place that are doing very well with net profits. So remember, net profits are what the shareholders are expecting you generate. So you have to plan out your company in a way that's going to generate net profits and maximize shareholders' wealth. So you can see here that points for most teams are a little harder to get in the second round, especially the teams that did very well in the first round, since you're competing with each other and every action you do affects everybody else in the simulation, but you're also competing against yourself. So if you do really well the first round, sometimes the year-over-year results can't be improved that much for the second round. But moving forward, if you're making all the right moves, you will do well moving forward and continue to make points in the future rounds as well. There's some teams like this team made 900 points and then an additional 500 points. I mean, that's excellent. Here's a team that 339 points, then 700 points because they were able to correct some of their mistakes. So it's also good about the game. If you do have a really bad round, you have the chance to kind of bounce back from that. I've seen teams fail that try to have a round where they don't do so well and a round where they do better. That never works, so don't even try that idea. Okay, so stock price, we see there's quite a range from $16 to $30 in stock price, and that has to do with profits. And stock price goes up when the company's more profitable. When sales are growing, profits are growing, stock prices go up. Now, if we look here, the sales per team, we had one team that their sales were flat, and that was mostly because they had forgotten to complete their round before the due date. So if you don't complete your round for the due date, your data is just copied over from the previous round and there are no changes. And I actually go in to verify that you didn't input anything, because sometimes people input some stuff but just don't complete the round. And I actually do go in and verify to make sure that you didn't enter anything. So make sure you don't miss a round, because that could really hurt you. And a lot of teams moved up quite nicely, and this team really came out from the bottom to the top of the pack this week with $352 million in sales, and that's an incredible turnaround. Okay. Earnings per share, you can see some teams are actually having their earnings per share go down. And so we had a few teams whose earnings per share went down. So if your earnings per share went down, most likely your points went down. So every round, this is a growing marketplace, growing between 20 and 30% a year. And it's very profitable if you're investing in your company. So earnings per share should always go up every round. Keep that in mind. And you could look at your earnings per share on your pro forma financial page and get an idea if your earnings per share are increasing. Okay, so let's go over to, so what's important for some companies is that you want to look at the one really important chart to help focus you, help to get you an idea of what's happening, is you want to go down to you want to check the individual chart, your individual performance chart, and you want to go down to the bottom and you want to see If you have a situation like this where you only made 2,000 cars, but your demand was 2,300, that these are sales that you lost and went to somebody else. Or you may have a situation where you have, your forecast met your demand, but in that case, you may have, if you check your production page, you may have leftover inventory. So this is a good panel to look at to double check where you are and how you're doing on your forecasting and what type of sales you're getting. So let me go into my practice, and I'm going to guide you through completing round 3 and some things, some ideas you should think about and some thoughts. Okay, so where I last left off is I completed round 2, and here's my sort of balanced scorecard for round 3. And I could see here that I did improve my profit margins, and that helped me earn points in my profit margins. But my assets and return on assets were lower. That's because I invested a lot of money in assets and haven't yet able to turn them into profits. So that's for me, I expected that, to have negative or low points here in total assets to return on assets. And I did do very well in my market capitalization, which is increasing my market value, which means stock price went up, increasing my book value, and increasing my earnings per share. My forecast was a little shaky. I lost some points here, not too many. But my big problem is I had an unexpected deficit, which means that I had unsold car inventory that I didn't sell. So I only earned 373 points. So what I would do as a student, I would go into the assessment tab and I'd look at my assessment and I follow the hints and try to get some information from that. I'd review my charts, specifically the industry chart, and I would go down to the bottom of that. Maybe I'd look at marketing and the sales to get a real idea of what's happening. And I could see here in my industry chart, I don't want the industry chart. I actually want the performance chart. Sorry. Okay, so performance chart. I can see here that I left, my forecasting of sedans was pretty weak. And I may have over forecast, since I'm meeting all my demand on truck and luxury and economy, I may have over forecasted on those. So with that information, I should go in the industry and look at my competitors. What have they done? How have they built their cars? What percentage or market potential are they getting? This company's getting 20% of the market. They're getting about 20%, and I'm getting less than 20%. So I'm not getting, this is me. I'm getting about 20%. So we're splitting the market somewhat equally. So I could review my financials if you're interested in that. And then let's go back to the sales. And I see that my customer expectations have increased, and I see that my importance factor, those remain the same. Those are not changing. So what I'm going to do is I want to see that the price I can sell the car increased, and my cost reductions from all my operational cost reductions, I have $2,400 in a cost reduction due to my operational investments for the production page, which is really important to keep me profitable. Okay, so let me, after analyzing, took some time to analyze the industry page, I'm going to try and refocus my car, try to make it a little bit more attractive, and so 2810. So here I have a 41% profit margin. So this is why it's important to go to your industry page and see that my profit margin for my car last round was 44%, 48, 50, and 57. So those are my targets that I want to surpass. And that's a quick way of checking where my profit margins are. And I'm not surpassing it. So I may have to lower. Here we go. Now I surpassed it. So I had to disappoint on engine power. And it's only 5% of their importance factor. So I'm comfortable disappointing on that because I need to make my profit margins. And I can't meet or exceed everyone's expectation levels all the time. And this is typical for companies. Companies are not meeting or exceeding your expectations in all areas. No company is perfect in all areas. It's just too expensive. So companies, to fight for their profits, they sometimes have to sacrifice. And you see this, just go to the grocery store. You see this in the peanut butter, where you're getting less peanut butter, less paper towels, fewer garbage bags, smaller cereal boxes, smaller cookie bags, swapping out ingredients for cheaper oils or high fructose corn syrup to lower their cost of manufacturing. So companies, choosing cheaper packaging or different things that they can do to help maximize their profits. And this is what, unfortunately, businesses don't really want to do that, but sometimes to remain competitive, they have to sacrifice, and they can't produce a product that is perfect every round. Now, let's see. I should increase my forecast here. Now I'm just winging it on the forecast. That is nothing. That's not something you should do. You should really look into the forecasts and try and do something better. And you shouldn't follow my exact formula here. I'm just randomly kind of putting in numbers here, hoping for the best. So, and I'm trying to meet or exceed my profit margins on all my cars if I can. So sometimes it's not as easily done, and I'm making sacrifices to try and get there. So because it's really, like I said before, it's very important to increase those profit margins. And if you want to satisfy customers and make better cars, then you have to invest in your plant and equipment to get there. Okay, so now I'm moving into the marketing page, and I see these ranges change with our industry. So these are going up every round as the industry is getting bigger and advertising is getting more important. So, and it's important here to look at the student user guide to see where how effective different advertising areas are. And one hint I could give you is don't leave any box unattended. Even if you don't feel a lot of value, at least put $1 there, because if you're the only one that invests $1 in radio and nobody else does, you'll pick up all the demand there. So, and in some cases, you really want to look at your total advertising and then divide that by the amount of cars you're selling and see how much of your advertising is eating into your profits. And that's a quick way to calculate your operational profit margin. So I'm going to take a minute to fill this in, and then I'll come back on the production page. It just takes a little long time to fill this in, so I'm not going to bore you while I'm doing it. So I'm just going to pause here. Okay, so I'm on the production page here, and I see that I'm going to check out my new forecast levels, and I see that I have to increase my plants here. So I have to buy one extra plant here. Here, I'm going to have to buy 2 plants. I'm good here, and I'm okay here. Okay, so I made my plant investments, so that way I could actually meet my production goals. And your excess shortage should always be 0. Don't try to pad your inventory or pad your excess, because you want to forecast every car you think you can sell and build to that forecast. Scrap and loss already accounted for, so the production runs will make sure that you can get this exact amount of cars produced. Now, I'm going to spend some money to increase my operational investments. And here, I'm just blankly increasing it because there's no strategy here. I just know that every round I want to increase it. You may have a strategy for some areas. You may want to increase more than other areas. So if I sell a lot of sedans, so maybe I want that to be a little bit extra money to be invested in some sedans, and maybe luxury is a good area where I can make more profits. So you got to come up with your own strategy for that. So once I complete the production, now I'm going to focus more on the finance page, and I'm going to look to see where I can improve. Okay, so I'm on the production page, and I see that I'm going to look at my pro forma, and I see my sales are going up. If I sell everything I forecasted, my sales will go up, my profits will go up nicely, and I have a nice surplus, which is important because I had a deficit last time that really wrecked my score. And one of the areas where you can easily pick up points every round is to make sure you have a surplus. So I'm fine with keeping some extra money there. I'm actually going to go ahead, and if I have that big of a surplus, I should probably think about some more investments in my operational investments if I have that big of a surplus. So I have a little extra money, I can go back and invest some more because I really want to keep my profits up, and that's a good way of managing that. So now I'm going to check my deficit again at 50 million. So I still have a nice surplus. So I'm going to go ahead and retire some funds to help manage my debt and my interest level and increase my net profits. And I'm going to go ahead and buy back some stock, which will help increase my earnings per share. Okay, so I feel confident. I have a nice surplus, and I'm going to run. So basically, the cash, I have to have a minimum of $25 million in cash as my minimum cash balance. So any money that I generate above that minimum cash balance and paying back last round's deficit, that becomes this round's surplus or deficit. So I was able to pay back my last round deficit, keep my minimum $25 million in my reserve cash, and still have a surplus of funds beyond that. And that's sort of explained, they kind of explain that down here. So I'm gonna finish the round and see how I did. Okay, so now I finished round 3. Here are the results for round 3. I'm currently in year 4, but I'm showing round 3 results, and I did really well. I got close to 500, which is my goal, because I'm trying to get. That's a good way of getting. You want to get around 500 every round, so you can get the full points for this assignment. So if we analyze this, my sales went up, my revenues per share went up, my did better with my quick ratio, which is my current assets. My debt ratio went down because I bought back debt, and so I earned points there. Now my profit margins, they went from 51 to 56%, 33 to 37 because I advertised a little bit more heavily, and 23 to 26. So I made some improvements in my profit margins. Some rounds are harder than others to improve profit margins, but I always want them to go up between 3 and 5%. At least that's a good level. Now I made a lot of investments in assets again. I bought a lot of plants. So I do expect my return on assets to be lower. That's going to change around in future rounds. As I start to sell more, I'll see that bounce back. So my return on equity went up because I reduced my debt and increased my profits, mostly because I increased my profits. My return on assets are small because I bought a lot of assets. That's normal. My stock price went up, my book value. My forecasting was weak. I lost points on my forecasting, but I made points from my operational investments because I increased my operational investments by 88%. And I had a surplus, so that got me to the 560. And if I look at my production page, I'll see that, I had a lot of leftover inventory, so it's a good thing I had a big surplus. So again, and this makes sense because I really didn't spend any time looking at really focusing on the forecast. I just winged it, and that's a bad idea for you to wing it. So I overproduced my cars and had excess inventory, which is one reason when I have such a huge excess inventory like that. Inventory is an asset. So if I have an asset of inventory, all those cars left over, it bloats up my inventory. And that's why I have bad return on assets and return on total asset turnovers, because I had all this leftover inventory that's part of my assets that I'm not getting a return on because I didn't sell them. So that's something I need to work on to do better next round. Okay, so I hope that this video has been helpful. Just some key ideas for people to improve their game, get better points, and I want to help you as much as possible here, but you have to help yourself too. So if you're not researching what other teams are doing, reading the student user guide, testing out ideas in the practice rounds, you're not going to perform as well as some other companies, other teams. So keep that in mind, and I wish you the best luck for completing round 3 and moving to the next round. Okay, thank you and take care.